What have China done overnight? Well, let's not mix our words. They've entered the currency wars against, as you say, the US dollar, as everyone else is. I think the implications are fairly global here. It was top of our global risk register. It has the potential to send deflation around the world, and the economic recovery that is very, very soft in the Eurozone has probably front and centre in terms of the victim of all of this, because an export-led deflation of the euro has to now face off against a cheaper yuan, and that's going to be very, very difficult for Eurozone exports.
I would say there's two main drivers here. First and foremost, we have to look at the IMF and the IMF criticism for the upcoming SDR inclusion of renminbi. So I think if you look at what they've announced, a lot of it is actually aimed at placating some of those criticisms from the IMF, such as a merging of the onshore and the offshore, the way the fixing is set. So that's the first reason. Second one, of course, the trade numbers have been disappointing. And you could argue, and I think it's legitimate to do so, that as the dollar has appreciated and most of the Asian currencies have weakened in response, the renminbi has lagged. So as a result of that, you have seen a relatively strong renminbi relative to some of the competitors in Asia.
What it does reflect is a sort of broad concern about China's sort of lesser competitiveness in international markets for its exports. I mean, such a key driver of Chinese growth. And the export numbers over the weekend down 8.9% were so bad, and then you have sort of broader economic indicators, the government's growth target of 7% at the end of the year. So it does reflect concern that the government wants to make its goods sort of more competitive again as it loses ground against some of its Asian rivals, and also as the U.S. dollar gains strength.
If we see a situation of good deflation where that effective tax cut gets spent by US consumers, by Eurozone consumers, by UK consumers, then yes, there are some real beneficiaries there. Of course, the risk is that return to normalisation, normal economic conditions, just gets delayed further, and we start to see build-ups in asset market bubbles again, almost in most markets across the world.